Time to talk tech. The Bank of Ghana is stepping up its regulatory efforts, announcing plans to issue comprehensive guidelines on digital lending by August 2025. The move comes amid rising concerns over exploitative lending practices targeting vulnerable Ghanaians. Governor Dr. Johnson Estiama says the new rules form part of a 5-point reform agenda aimed at strengthening financial stability, ensuring consumer fairness, and tightening market discipline. Joining me on Zoom is lead for Eyes of Africa, Henry Kobler. Hey, Henry. So with the Bank of Ghana set to introduce digital lending guidelines by August, what key regulatory features do you think are necessary to curb the exploitative practices we've seen from some platforms?
Thank you very much. So I think that it comes in as much that we're getting into the digital age. And as much as we're getting into the digital age, you're having people fully depend on platforms to push in their transactions, pushing for lendings and all of that. I am looking forward to quite a number of reforms that would really come in, especially connecting with fintechs to main banks as well. I mean, there've been quite a number of reforms that we've been expecting from the Bank of Ghana. But for me, generally, I'm looking at the reforms that comes in terms of anti-money laundering. Really on most of these platforms is very key for us. Again, we're also looking at the charges that seem to come true on most of these platforms as well. I mean, one of the most important things which we've been talking about, which I think that the governor had also pointed out in the recent time, is the fees that seem to be coming on most banking platforms that are available, and that has been a major concern for most of us as Ghanaians. And I think that it erodes the gains we've made in terms of e-levies on digital platforms.
Well, Henry, we've seen a rise in digital lending apps. How have they outpaced regulatory oversight by, the powers that be? And what risks do these pose to consumers and to the fintech ecosystem?
I think that with these platforms, most of it has been that it's just so easy that most of the people that create these platforms and put them on generally do not go through any regulatory reforms and checks before they throw them up there. Again, I think that the monitoring on most of these platforms is extremely low, where it doesn't get to curb and punish people that are putting up these platforms. I mean, usually we've seen a lot of lists being thrown out there to discredit and tell us that these platforms are not credible. But what are the persecutions that we basically would have for these platforms? I mean, it has to come in clear for us to push it out there for people to understand the implications of getting in. Again, I'm thinking that generally, when it has to be in terms of lending platforms, it also has to be that you would always have to go through the sandboxes. Most of the developers of these platforms do not go through any sandboxes. And so, again, it poses a lot of threats. Personal data, personal security also gets to be a big of threats as well, where you have people taking people's data and manipulating it against them. I think that all of them comes into play in terms of these platforms and how they're being put out there.
Yeah, I mean, you talked about the caps on card transaction fees as well. I'm just trying to figure out how these measures can improve the competitive landscape in the fintech ecosystem.
Yeah, I mean, the fintech ecosystem generally sits with volumes in terms of transactions and then the fees that comes through to them. And if you do not cap them relatively, you're going to have anybody go out of their lines to be using explorative ways to be getting some level of credit to them. And so for me, it really comes at a good point where it is capped, it is regulated, and we could have a plain way to understand the charges that comes in on these platforms.
Next question, how to deal with predatory lending behavior and how to detect them, for instance, using maybe AI and other innovation. Aside from these measures, could we employ technology, AI?
Yes, we could. We could be applying a lot of technology in that regard. The problem really has to be the terms of development for most of these platforms. I mean, you're not going to have AI developers managing most of these platforms, data analytics, data scientists sitting on most of these platforms, especially within our regions. It's very difficult to have most of these skill sets easily available for us. But yes, having that machinery in terms of the technology on these platforms really is going to be very important in terms of how transactions on these platforms are. But again, it's also going to have to look at how we regulate these optics within these applications, because again, it relatively also gets to be intrusive. It could relatively be looking into could definitely deploy in terms of APIs to looking behind most of these applications, even intruding into other banking applications that are on customers' mobile phones and all of that. So yes, it comes in with its advantages, but there could be that form where regulations could guide the use of this as well.
Yeah, Henry, these stricter regulations, they could drive innovation in the fintech space, or they could also push out startups or small businesses, small digital lenders. What say you?
Yes, it could be, but I think that it's important that for me, my point when it comes out to technology is that it always has to be regulated. I mean, if you do not regulate it, you're going to have innovators always go out of scope to give themselves the leverage to overcreate. I mean, I've seen quite a number of acts within the machine learning and AI that really gets to be very scary, even for me in technology and the future thereof of it. But again, we can always just consider it in terms of it killing businesses. But again, I'm thinking that it's very important that we institute that as well.
All right, Henry Kobler, lead Eyes of Africa. Great to see you. Thank you so much for your analysis. Wow, wow.